Hello everyone, welcome to Elliott Wave Focus.com YouTube channel. This is Henry. Today is Friday, August the 6th. The time is around 1 a.m. GMT. And today we're going to be looking at the chart of the Facebook. This is a 45 minutes chart here. We can see it ended with 1 in the intermediate degree right here at 377. And then it ended with 2 pullback in this level 347, as you can see right here. There was a blue box, and we bought it here in the live session in the group 3. We recommend it to be long in this 100% extension area in the Facebook, and then it has reacted to the upside. So that's why if people bought it here from this area, which is the 100% of this WXY, then they can already enjoy partial profit or move stop loss to your entry level, and therefore creating a completely risk-free position, in the sense that if it goes lower again, then you can get stopped out, but there won't be any losses. Okay, so that's the one thing that we do in the Elliott Wave forecast, is we identify an area in which I think we have a higher probability of reaction. Whether the reaction can extend or not is two different things, but at least we can get some sort of reaction, so that allows us to create a risk-free position. Okay, so then now at this stage, since we have seen the reaction from the blue box, we need to break above this previous peak to rule out a double correction, right? A double correction means we can get another WXY 7 swing structure if it fails to break above this previous peak. Now we're gonna discuss about possibilities, alternates, as well as some kind of logic behind what we are doing here. So if we take a look at the larger time frame, if we take a look at the daily chart, now remember this is 1 and 2 here in the intermediate degree. So right here, this is the 1 and 2 here, okay, and we're talking about the cycle that started from January 2021. So if you take a look at this, it looks like, now there, like I said, there are a couple of ways you can try to label this. Wouldn't deny that. Okay, now to be honest, if you look at the entire rally from January 2021, so far the pullback has been pretty shallow. I mean, I don't see any significant pullback that maybe some sort of 50% reaction, 50% pullback. I haven't seen that. So in a way, I think the risk here is really that this peak here might be ending some sort of 5 ways from here. That's the biggest risk I can see, right? That we could be ending 5 ways from here. And if so, then this leg here is actually in the first start of a bigger correction, and then we're gonna get for the downside. So that, number one, is the biggest risk I can see. So because the pullback so far is very shallow, so I'm not sure whether this is really the 1 and 2 100%, or maybe we are in fact still in the wave 1 here, right? Or maybe after marginal high we get completed with 1 here, which is also possible, which is the cycle from January. So that's one thing that we need to keep in mind. The pullback has been shallow. However, having said that, back to the 1 hour chart, I think what's important here is to try to understand the structure of the pullback, or the characteristic of this pullback right here. Now you can see we got a huge rally somewhere in the middle right here, and this one looks like a 3 swing, a huge rally, and then another pullback, right? If you take a look at this structure here, it does look like a corrective overlapping structure, right? It looks like a corrective overlapping structure. Now I think it's not possible to label this, let's say 1 2 3 4 with the 4 so high like this, right? So this is a 3 swing. You got a connector, right? This rally here is absolutely not a wave 4, it's a connector, and then you got a new low again after that. So then basically you have a 3 swing ABC, and then another extension lower within the Y leg. So it's a double correction. Technically this structure here is a corrective structure, right? It is a corrective structure. Now, if this is a corrective structure here, then it doesn't matter what our risk is. That okay, well, this could be ending the bigger cycle from January and then to bigger pullback. The thing is, if this is truly already start to become bearish, this decline would have been an impulse. It would have been something like this without bouncing like this, maybe 4, 5. So it will be a clear 5 ways down if this were to be bearish, but it is not. It is looking corrective overlapping structure, which suggests that the right side remains higher since the pullback is corrective, and therefore it makes sense to be on the bullish side. And yes, at this stage, since it has reacted higher from the blue box, we do still need to break above here. Otherwise, yes, it could be doing a bigger WXY. For example, this could be labeled, let's say, ABC, and then ending X, and then doing a Y. That's possible. But still, even if that were to be in the case, this is going to still remain corrective, and therefore, if it happens, the next equal leg right here is going to find another support, another buyer, since the first leg here doesn't look like an impulse. Okay, and I think the most important thing is all about the execution. And again, if someone were to execute the long side from this extreme area, the blue box, then it doesn't matter whether it's doing double or not. It will continue to be safe. If it turns lower doing double, then yeah, you get out with no losses. But you know that the next 100% is going to find another support, since this one, it looks corrective right here. Now, if it breaks above here, then this will confirm the view here that we have started with 3 on the upside, and then it will extend higher. Minimum target is going to be 100% extension of the wave 1, and it can go as high as 161.8% extension. Okay, so that's what we are looking at here. As always, if you do want to get regular updates on the stocks, indices, ETF, Forex, commodities, do feel free to check our service. We have 14 days free trial. The link is provided in the description of the video below. So I'll see you all again next week. Have a nice day, everyone.